Before we jump in, if you like honest stock updates, real portfolio transparency, and watching this experiment week by week, hit like, subscribe, and comment your take on the stock right now. Alright, welcome back to the series where I buy 10 shares of... And we are already sitting at episode 24, so almost half a year has passed already, and I think we can skip right to the comments, which is only one. $49 average for you now, better than when you first started. Absolutely right, that's the reason we are doing this. PayPal right now, as you can see here, is has been going lower on like almost every single occasion. 1 day chart negative, 5 day chart negative, 1 month chart negative, 6 months chart negative, year to date negative, 1 year negative, 5 years negative, 10 years slightly positive, but if you count on inflation, it surely is negative too. So yeah, not really looking good for PayPal, just if you look at the stock price in itself. But as you all know, past performance is no indicator for future performance, and that's the same for PayPal as well. It's very likely, or it's possible, that PayPal goes up in the future, but it's also possible that PayPal continues to go down like it did in the past couple of years. So let's have a look at my current purchases. As you can see, one more purchase came to the portfolio, which was 20 stocks on the 15th of May. I bought every single share for $44.90, which I think is quite a decent price. As you can see, we're pretty much sitting at the lowest point of the week right now, and I bought like for 50% more than that. Could have been worse, could have been better. I think it's a pretty decent price, if you ask me. So that's another $898 that I invested that week, and total invested we are sitting at $33,027 right now. So if you take a look here, the week wasn't too it wasn't exactly packed with action. It's a slight decline, around 2%. We've seen worse, we've seen better. Pretty average week for PayPal, if you ask me. No big deal, pretty much a readjustment after the quarterly results they posted. Nothing much to see here. If you take a look at the price we had at the start of the series, we were at $62.28, and that's 28% lower than we are right now. But if you continued to buy every single week like I did, then you would be closer to the benchmark I'm having, which is around negative 9.85%. And we currently own 670 shares and a bit of shares we got as strips. So yeah, nothing too special that's happened in that week. Pretty interesting to see our portfolio net worth, which only grew very slightly despite us putting almost $1,000 into the stock. But yeah, as you can tell, due to the decline in the stock price, we made around $600 in unrealized losses over the week. That's why in total our portfolio net worth didn't really grow as much. In total, we are down $3,254, which is the highest we're in unrealized losses since starting the series. But percentage-wise, we're not doing that bad right now. It's pretty all right. Next, let's take a look at the dividends. Nothing has changed here since the dividend is supposed to stay the same. At the current point in time, we are at 670 shares. That leaves us with an expected quarterly dividend of $93.86. If you project that over 1 year, that's $375.43. And if you were to break that down on a monthly basis, we're sitting at $31.29. And I think that's quite the hefty sum already. We've seen quite the quite the growth in this matter, and I think here you can really tell that buying every single week or buying with every opportunity you get really gives you quite the big numbers over time. So even though $30 per month isn't really too much, it can already pay for like your Netflix subscription and yeah, maybe something else. That's still the same as before, since we didn't get any new dividend, so we still have only received one dividend based on 179 shares. I covered this on the last video already, so I won't go into more detail here, but let's get to the fun stuff, which is the news, which happened over the past week. And for just a week's time that's gone by, there's quite a bit that did happen. And yeah, as you can see, the stock price drifted a bit lower after the earnings week. Pretty normal thing for PayPal to happen, but yeah. For some people, it might be a bit frustrating going lower after already having like some sort of crash of 10%. But yeah, that's just that. Q1 earnings reaction pretty much dominated the sentiment, and I realized that when I read comments on several stock apps, stock pages, whatever, like on several stock pages, you can like comment your current opinion on the stock, and right now it's quite bad. Like I've seen worse comments on PayPal, but right now we're at one of the worst times currently when it comes to people's opinion of the stock. So my advice here is to just like stay calm, relax, take a step back. Going 10, 12, 15% lower over the matter of 2 weeks, that's huge. Don't get me wrong, but like look at your notes that you made when you made that decision, when you decided to buy the stock, and then just reaffirm yourself. Look at why you bought the stock. Look at if PayPal is executing on what you want them to execute. Is it doing what you want them to do, like just by looking at their numbers, their quarterly reports, and then you can make a decision based upon that. But like, don't get overly emotional when discussing with other people who lost a lot of money, because that usually leads you to make the wrong decision. But that's just my 2 cents on the matter. Stay cool, reaffirm yourself, and then if you feel like PayPal isn't worth your time, you can do better otherwise, then sell of course, and go somewhere else. That's no big deal. But like, if you feel like they're doing what you want them to do and you believe in the turnaround, then you would be pretty stupid to just like listen to what other people have to say on that matter, who are usually in a very depressed state as well. So that's my take. Yeah, the Motley Fool, they put out an article saying that the headline numbers are pretty good, but the details of the quarterly report don't really look as good. They pretty much noted that the revenue rose 7% and the EPS actually up to 1% as well. Also, the TPV rose 11%, but they also highlighted that the weak branded checkout, which is very important for the stock, and margin pressure. But the really disappointing part would be the Q2 guidance, as what seems to be the real issue. And I think I would agree. For me, the very bad guidance was the biggest downtake of the quarterly results as well. Everything else was pretty okay. Branded checkout could have been better, but at this point I'm used to what happens there. But yeah, lots of other numbers were pretty good actually, like much better than I expected. But yeah, for PayPal you always have to be a bit careful. Also, one more thing, Venmo app refresh launched on May 12th. So PayPal announced that Venmo reimagines its app experience on May 12th. So yeah, the investor angle would be that PayPal is trying to increase discovery, engagement, and product depth inside Venmo, and not just keep it as a peer-to-peer transfer app, which is decent, but like no huge headline, but I think it's worthy of being noted here as well. So Seahawks partnership. So PayPal did something pretty interesting. On May 11th, PayPal announced that its first NFL club partnership is with the Seattle Seahawks, and they are becoming the team's official fan-to-fan payments and exclusive digital ticket payment processing partner. I think that's pretty decent because that in itself is not a massive earnings catalyst, but it gives PayPal more payment touchpoints around ticketing, resale, refunds, fan payments, and event-related transactions. One market write-up framed it as PayPal testing a new path for fan payments growth, and I would agree here. So decent thing to happen, not super relevant, but it's just good to see PayPal is still growing in their own way. Yeah, I also took a look at the current analyst sentiment, and right now it seems to be that there's some sort of hold consensus with 8 analysts recommending to buy, 32 recommending to hold, and 5 recommending to sell. And the average price target is just $55.85. It's probably good that right now they're holding back a little and not just changing things up every single day, but that's pretty much it for our current situation and the update at this point in time.